Great. Looks like we are at 10 o'clock and we will start now our session on this morning. Good for everybody to be here, and we will bless the Lord at all times, and his praise shall continually be in our mouths. I am Bishop Ulysses Henderson, and I am your facilitator for our empowerment sessions for jurisdiction number 1. We're so blessed and favored to be able to have come together once again for another state workers meeting. My co-panelist is Administrative Assistant Michael Henderson. He's not with us in the panel today. He is with us watching today, but just wanted to acknowledge him. And of course, we want to acknowledge our jurisdictional bishop, Bishop Joe Lewis Ely, and our Senate Supervisor, Mother Barbara Bryant. And it is good to be with the saints on today. As we normally does, we kind of, I think actually we're starting now. So again, good to be here. Good to see everybody. And my name is Bishop Ulysses Henderson, and I am your facilitator here today. And we have come together for another, to start of another empowerment series. I want to just acknowledge my co-facilitator and coordinator, Administrative Assistant Michael Henderson. And of course, we want to honor our jurisdictional bishop, Bishop Joe Lewis Ely, and our Senate Supervisor, Mother Barbara Bryant. And it's good to be with you here on today. We've got a great week. I hope you are ready. We've got some great sessions that are in store for you, and I'm looking forward to that. And I'm also looking forward to our week of worship and our evening worship services that will be convening at Gospel Memorial, our jurisdictional headquarters. So I trust and pray that all of you are well and safe. We are yet still trying to struggle and get through a pandemic. We know from some of the data, we've been on somewhat of a downturn. But yet and still through all of this, God is still in control. And so today we leading off with some great and awesome pertinent information. And of course, what we strive to do in terms of these empowerment sessions is to really provide sessions that are really practical, that are really going to help us not just to come together and waste time, but we really want to give you some very, very practical tools that will be able to help you in your ministries and in your individual lives. And of course, today, we are so blessed to have a very dynamic young man. I'm proud to say, to introduce him because he's my cousin, my little cousin, Elder Mark Henderson. He is a wonderful person, and he is going to teach us about financial planning. So this session really is financial planning for the preacher. It's, from my experience, working both on a national level and on a local level, it's always a shame that you come across a pastor who has worked and labored for 20 years, 30 years, and they come towards the end of their career. And I remember reading actually some stats not long ago that said close to 40% of preachers would retire if they could, but they can't because they can't afford to. And it's not really a great thing for you to come towards end of your career and then you have not planned for your retirement. And it's even sadder when you have a preacher and a pastor who have pastored for 30, 40 years. He passes away, and now the people have to find money to bury him, and he leaves a widow that is not cared for. The Bible tells us that a good man leaves an inheritance to his children's children. And so, of course, it's important for us to really engage and look at this area of financial planning, which is very, very critical. And it's not really an area that we look at. And I will also say that for me, as I advise pastors, especially who are coming into ministries and trying to negotiate their compensation packages, understanding that the financial planning aspect, insurance, 403Bs, or Rabbi Trust, these are other things that you can incorporate that will help you in terms of being able to adequately plan out your future. Key man clauses, insurance, liability insurance. If something happens to you, would you still be able to have insurance to be able to cover your salaries. These are a lot of things that require your attention and require you to really look at and to financially plan and to be astute to really prepare and take advantage of the opportunities that you have as preachers and pastors. So let me quit rambling and let us really get to the professional, because I'm not the professional in this area. And I want to introduce Mark Henderson. He is a certified financial planner with a company called Thrivent. And Thrivent's a Fortune 500 company, has a full range of expert financial solutions that you can utilize, not just from a personal level, but I'm sure he can also provide some suitable solutions for your ministries as well. And so he runs a wealth management practice, which is the Wealth Legacy Group in Los Angeles, whose mission is to help provide financial clarity so that you can use your money as a tool to turn your goals into a reality. He is passionate about personal finances and believes in making the complex simple. Born and raised in LA. His mother—
Go Rams.
Go Rams, right? Go Rams. His mother knew his best chance at escaping the hardships of South Central. Born and raised in South Central, right? Was keeping him in church. And of course, he grew up under the leadership of Bishop J.B. Hackworth. Bishop Hackworth, we have a long-standing relationship with Bishop Hackworth. My family has a long-standing. Mark's grandfather is actually my father's nephew, and his great-grandfather was a long-standing deacon there at the Testimonial Cathedral Church of God in Christ. Mark learned the importance of putting God first and developed a deep respect for the church and how instrumental it was in preparing him for life. As a young man, he was called to serve people, and some would say that is actually a ministry. Now he currently serves as the CFO and chairman of Hope's House Christian Ministries, a non-denominational church in San Fernando Valley that has been growing by leaps and bounds. And I was very familiar with that church because I used to work across the street from that ministry. And the growth of this church has propelled him to serving as a church administration consultant for the World Highway Ministries, One Church International, the Southern California Evangelistic Ecclesiastical Jurisdiction, Bishop Milton, and Holy Assembly Church of God in Christ, just to name a few. So today we are just so pleased and honored to have none other than Mark Henderson, who is going to lead us forward in our session. Mark, the floor is yours.
Bishop, thank you so much for this opportunity and allowing me to share really what I believe God has called me to share across really, more than just here locally in the LA area. But now God has really exposed me to other states and other regions to really bring this idea of financial planning in the local church. And so I've been honored and I am honored to be here today. I want to extend my gratitude as well to Bishop Ely and Mother Bryant for making this topic a priority as it relates to financial planning. I'll tell you, it's not a common topic that pastors and that churches put at the top of the list. But again, I'm honored to open up this week's empowerment sessions. So my assignment today is to really talk about what it means to create and establish a financial plan for the preacher, for the pastor, for the elder, for the minister. And I recently, as I was preparing for this workshop today, did some research, and Forbes recently did an article, and this article talked about one of the roles or the most stressful jobs in America. This is pre-pandemic, and so the role of a pastor was number 5 on that list, up and above a CEO, up and above a surgeon, up and above a police officer or a social worker, up and above a financial analyst. The role of a pastor is seen as a stressful job. And one of the reasons they talked about that is because a preacher holds all of these titles. A pastor is a CEO of his church. A pastor is a social worker providing counseling. A pastor is a financial manager of their church. But with all of these titles that they hold, pastors across America are typically underpaid in the work that they do. And this directly ties, I believe, to the result of financial planning, where pastors and preachers and churches feel that they don't have the resources necessary to create a financial plan. And so we're going to talk about that, what it means, and how we can, at whatever stage, at whatever life plan you're at, that we can establish something for you to have a plan both now and for later. And so let's dig right in. Let's see here. All right. So we have an agenda today: financial planning for the preacher. 5 strategies for success is what I'm calling this. And we're going to talk about 5 key areas: building a solid financial habits, diversifying, what that means to diversify your retirement income. We're also going to talk about taxes and the implications of taxes. We'll spend some time today talking about what Bishop mentioned earlier, protecting yourself against the what ifs in life, right? There are going to be some things that are expected and some things that are unexpected. How can we plan and put something in place for that? And then a topic that's not talked about enough: Social Security in the church, right? What does that mean for the pastor to opt in or opt out of Social Security? Bishop went through my experience. I want to share just a little bit. I've been a financial advisor for over 12 years now. Initially getting into the industry at Wells Fargo as a financial analyst, and transitioned to, a lot of you pastors may be familiar with a company called Guide One. Guide One insurance company provided liability, or they provide property and liability insurance for churches. And I spent some time as a regional director managing Nevada, California, and Utah, helping churches to protect their greatest asset, which was the building and the people. Also spent some time working at Thompson Wealth Management, which is a local financial services firm. And really, this journey on really being a resource for churches has resulted in me also working at Fidelity Investments as an advisor, and more recently as a wealth manager and financial advisor with Thrivent. Talked about, you already shared about my ministry experience, but I've been, like you said, I grew up Church of God in Christ, grew up in the church, and I can't remember a time where I didn't serve in the church, whether it was Sunday school, YPWW, or whatever it was. I found myself multiple days a week at Testimonial doing something. And so from that point all the way throughout my career, I've always found myself in some role in helping churches with administrative tasks and financial management. I do have an MBA in financial planning from Indiana Wesleyan, certified financial planner designation from Pepperdine, CKA, which is Certified Kingdom Advisor through the Ron Blue Institute, which is a fairly new program, but it's really taken this idea of stewardship and finance and what the word says and applying it to kind of the practical tools that we're going to be talking about today. And I did my undergrad study right here in LA native. But that is what we're going to be talking about today. That is a little bit about my background. So before we get into it, and I think Bishop referenced it a little bit, but this idea of retirement, I do want to frame it because I think what I've come across in working with pastors and preachers is that sometimes we associate the word retirement with my assignment being done. Like there's nothing left for me to do. And I truly believe that there are stages in retirement. From a financial planning standpoint, we talk about 3 different areas: your go-go years, which you're still actively working in the ministry, still actively working if you're bivocational, still able to go and still able to move. But because of financial independence, because you have things set up, you make a choice not to be as active, right, in the workforce, right? And so you've set up certain accounts that has replaced your income. And we call it your go-go years because you still have the ability to go and do what you've been called to do. Then we call the second stage what we call your Slogo years, where because of health, because you're getting older, you slow down a little bit. And so we want to make sure that there's resources available for you to slow down. And then the third is the no-go years. The no-go years are those years in your retirement where because of health challenges, you need someone to care for you. And so today we're going to be talking about creating a financial plan where you have resources available through all of those different stages in life. So for the sake of this, we're going to go through some scenarios, and I'm going to share some client stories. I won't share any names, won't share any actual photos, but I want to give you some case studies and some examples of the conversations that I'm having. Also, if you do have questions, whether you're on YouTube or on Facebook or you're on the Zoom, feel free to put them in the chat. We will have a Q&A section on the back end of this seminar. So this is Tiffany. Tiffany is a client of mine, and I met Tiffany after a situation, and I'll share. So Tiffany grew up as a PK. Her father was passionate about the ministry, very active in his church. He was an assistant pastor and really loved the work that God had called him to do. Like many of you that are probably watching, he was always first to offer help, always to provide. Someone needed anything, always available for others. But one day he found himself in need of an emergency surgery. Well, there were complications as a result. And unexpectedly, at the age of 56, Tiffany's father passed away. And this obviously devastated the family, devastated the church. Never would they have imagined that an emergency surgery would result in their father and their assistant pastor not coming home, especially at the age of 56. Now, unfortunately, I didn't get a chance to meet him prior to this, and no one else had approached him about preparing for a situation like this. And so there was no plans in place. And without life insurance, without a savings, the funeral expenses were a burden to the family. The mother had to file taxes the following year. And as a result, because she lost the deduction of having a spouse, now her deductions went down, her expenses stayed the same, which means she was spending the same amount of money. And so the taxes that she incurred actually went up. So there was a lot of financial hardships as a result of him passing away that could have been easily mitigated as a result to having a simple financial plan. And so Tiffany has recently become a client, shared the situation, and she just really is an advocate for the conversations that we're going to be having. But what I've seen, unfortunately, that's often all too common is that many pastors, preachers, and churches believe that they don't have the resources to create a financial plan, to establish the right life insurance package, to establish a key person policy, or to establish a 403B, which is a retirement account. But after a few meetings with a few clients, what we realize is you can't afford not to have a plan. Scripture talks about, and Bishop mentioned it, is that we're supposed to leave an inheritance for our children's children's children. And if we don't have a plan in place to do that, then we have not executed what God has called us to do. And so whatever level you're at, whatever stage in life you're at, there is something that can be done. There is a plan that we can put in place. So this is a recent study that was done by allpastors.org. And I want you to take a self-assessment. And this study just talked about, and it said that 53% of pastors, and this kind of correlates with what you talked about earlier, Bishop, but 53% of pastors are concerned about their family's financial future, right? I think this also ties directly to the stress level that pastors carry. 57% of pastors believe that they don't receive a livable wage. And then 57% of pastors, also around the same amount, believe that they're concerned, or they are concerned about being able to pay their bills. So how do you balance caring for others and being the role of a pastor or a preacher, but also making sure that your family is taken care of? Well, that's where we're going to review some what I call the 5 foundational financial planning strategies for preachers. Now, I want you to keep in mind, for the sake of this presentation or seminar, this is not an exhaustive list. There are many other areas, but I believe what we're going to provide today will be a guideline to help you move in an area of confidence and clarity as it relates to achieving your financial goals. So before we get started, self-assessment, I want you to take a snapshot of where you are today. You don't have to put this in the chat or anything, but I want you to just think about, how prepared today do you feel about your financial future? just based off of the few different things that I mentioned today. How prepared are you today? Do you feel well prepared and confident? Do you feel like you're on your way, but could use some help to make sure that you're on track? Do you feel like you're on your way, but there are some gaps that need to be addressed? Or maybe you feel unprepared and uncertain. Wherever stage you're at, just want you to take a self-assessment today. And we want to provide some resources to so that you can thrive. So Bankrate, which is a financial index, bankrate.com, you probably heard of it. They provide a lot of financial resources. They have a lot of data. They did a study, and this is pre-pandemic. So they did a study, and the study said that 51% of Americans, so across the world, could not cover a setback of $1,000. And they also found that 1 in 5 had zero savings. Now, I want to relate this a little bit more to the Black community, to the Black church, who has been impacted even more severely as a result of the pandemic. I would beg, or I would believe that that number is probably higher. And so this really brings us to the first strategy of the 5 in building a successful retirement: building solid financial habits. And so we're going to introduce 3 different habits that we're going to talk about that you need to build. The first financial habit, you both can utilize now. So wherever you're at in life now, and it can be used in retirement. And it's really about creating a cash flow plan, creating a budget, creating what you may be familiar with within the church, a profit and loss statement. What is my income? What are my expenses? And when you identify how you use your money each month, you're giving, you're saving, you're spending, you're paying of your bills, you separate what's left to spend and you begin to gain control so that you can have a simpler day-to-day money management decisions. And when you do that, the idea and the goal is to create margin, right? To create breathing room, to create space so that you can do number 2, which is building a savings. But the challenge that I see for a lot of bivocational pastors, those who are making a salary that's contingent based off of church giving, is the fluctuations each month, right? I've served as a CFO for Hope's House Christian Ministries in the Valley, and a few different other churches, and working in the administration process. And I see what the tithes and offering looks like, and it's no surprise to you that there is a fluctuation in what that amount is. And so, how does that impact the pastor, right? Does a pastor still get a set salary? Are there resources? Most often, that is not the case. And so tracking your spending is going to help you to create a plan for now and for later. And understanding what your income and your spending, engaging how they align with what your goals are, critical to this process. And this may seem very simple, but it's so foundational in really establishing a financial plan. One of the biggest areas in this cash flow plan is going to be your housing cost. Now, some pastors maybe some pastors have what's called a housing stipend, right, or a housing allowance. And what happens with that housing allowance after the pastor passes away? Is there a plan in place to continue it to the widow? Is there a plan in place when the pastor retires to continue the housing allowance? This is something that we want to begin to have the conversations now, so that we have a bucket of money that is set aside for what I've seen as the most expensive, or one of the most expensive costs in retirement, is your housing cost.
Mark,
it looks like you have a question there.
Yeah, Mark, I don't want to break up your flow, but what may be helpful is when you talk about building savings, what are some guidelines in terms of, like, you say build savings, how much would you say that I should set aside in terms of trying to build that savings reserve?
Yeah. So there's 2 different areas, right? So there's a savings, and then there's investments, right? Investments for your future. So for savings, really what we want to build, Dave Ramsey used this rule of thumb of $1,000. So if you have no savings today, the first rule of thumb is to get $1,000 into a savings account as quickly as possible. Once you get that, we want to get around 3 to 6 months of what your expenses are, right? But before we can do that, we have to do kind of that cash flow plan. We need to know what those monthly expenses are. right? So 36 months is kind of that rule of thumb with the savings. And here, and it's funny because when my clients get to that stage, they want to invest that money, because for most people, that's the most money they've had in a savings account ever in their life. And I get it. You want that money to continue to grow, but the goal of that savings account is not to grow it. The goal of that savings account is to protect it for emergency purposes. So first rule of thumb, if you don't have $1,000, you want to get $1,000 in your savings account as quickly as possible for an emergency. And the second is at least 3 to 6 months of your expenses.
And then secondly, you mentioned something that I think is important in terms of investment. I have investment. My son has stocks, but there's a little bit of some misinformation regarding investment. Some people teach that, hey, when you get in stock, if you invest in stocks, it's almost like gambling. What information can you give that would encourage people to not only save, but also to invest so that their money can grow?
Yeah. So one of the things that I was gonna share earlier, but I think it's appropriate now, is the reason we save is for now. The reason we invest is for later. And one of the reasons we invest for later is this idea of inflation, right? This idea that things are going to cost more money in the future. And we're already seeing that now. Just think about 2 years ago and how much gas prices have gone up, how much food costs have gone up. I don't do most of the grocery shopping at my house, but my wife sent me to the grocery store to get some breakfast items, and bacon was $11. I don't remember bacon being $11, but this idea that things are going to cost more. So think 10, 20 years down the line, things are going to cost more. And so this idea of investing and so one of the challenges, to your point, that people feel is like investing is gambling. You're putting money in the stock market and you don't know how it's going to grow. What I truly believe in my career is that investing in the stock market is investing in companies, right? You're investing in products and services. You're investing in business models. And so what I truly believe is you should not invest in anything that you don't understand, right? And so if you have an iPhone, that's a company you should probably consider investing in, because you're already a consumer of the product. If you're watching this on YouTube, if you're watching this on Facebook, if you're watching this on Zoom, these are companies, what we call publicly traded companies, that you have the ability to invest in. Just like your church is an organism, an organization that grows based off of the preaching and based off of the community impact. The same thing happens with companies. They grow based off the products and services. And so there's a scripture that talks about the 5 talents, right? And talks about what you can do with 1, what you can do with 2, or what you can do with 5. And this idea of investing is that 5 talent model. Is taking what you have and either yourself doing your due diligence and investing, or hiring a financial professional and working with them to find quality companies or quality investments that are going to grow over time.
Yeah, and the other thing too, the note with investing is that when you actually buy stock, you're buying share, you're actually buying ownership into a company, and that's what people really don't understand. So the thing is that, like I bought McDonald's stock, because we went to McDonald's when my son was little almost every day.
Right.
So you're investing in self, in Disney, in Home Depot.
Right.
And really, I think the difference in terms of investing is some people do what's called day trading, where they're going through and they're looking. That, I think, goes more towards a gambling, because you're highly depending upon the gains, where you're pulling out money, investing in money, depending on short-term gains. But when you actually invest in and you are putting money into a long-term return, I think that is a different situation. And the truth of the matter is that people are investing into your churches. It's the same concept, because they are assuming that as they sow into the ministry, it's actually going to be used for its ministry growth. So
exactly. That's good. So this idea of investing really begs us to have a cash flow plan, so that we have margin, so that there is an amount of money each month that now we can allocate to these investments, right? If we don't have a plan on our income and our expenses, then we'll never have enough money each month to invest. So this step is foundational in having a budget and having a plan to say, all right, this is what I make, this is what I spend, and this is what is going to investing. And so we talked about the rule of thumb for savings. Rule of thumb for investing is 15% of what your income is, right? That's typically what we want to get to. Now, that number can change depending on if you currently have an investment or if you're trying to play catch up. And so that's where really going through an analysis and identifying, based off of what my goals are, what should I be investing on a monthly basis in order to reach that goal, right? Based off of how investments grow. But again, the first step is we have to create space. We have to create breathing room within our budget so that we can begin to allocate resources. And so the last piece of kind of this financial habits that we're talking about is it's really eliminating debt. Debt has really robs you of your future spending. It robs you of your future. When you have debt payments, you have credit card payments, you have student loan payments. These obligations that you carry 10, 20, 30 years, now that's resources available that you are not able to do the things that God has called you to do. Really just provide for your family. And so sometimes the hardest part of getting out of debt is just getting started. And so the idea of a cash flow plan, the same thing. I believe you need to have a debt plan. I think you need to write down everything that you owe, write down who you owe, what you owe, how much you owe them, and what the interest rate is. That's the very first step. If you start there, then there are a few different strategies on now, how do we want to tackle this debt, right? So one of the strategies, we call it the debt snowball strategy, where now that we have everything organized on the paper, let's realign it to the smallest debt that we owe first, right? Attack that debt first and then roll that entire payment to the next one, and then roll that entire payment to the next one. And this idea is that you're going to have small, quick wins with your smaller debt, which helps to motivate and encourage you that you're knocking this stuff out, right? The other way, for those that are more analytical and want to save the most money possible, the other idea is called the avalanche, where you're taking the highest interest rate first and paying that off first, right? Because you're saving the most by paying the highest interest rate and then rolling that down, right? So there's a lot of different methods to pay off debt, but the idea is creating a financial plan before we get to the investing, before we get to the savings. We really have to have a plan on the debt and making sure that we're paying off debt. All right, so another kind of quick story to share. This is a client related story. I call it Pastor J and Lady C. So they're a husband and wife couple that I met down south in Texas, and they've been in ministry and planted churches for a number of years. And they've had a few different investment accounts, retirement accounts, and we'll talk a little bit about what a 403B is at different ministries. And they were just trying to figure out, all right, Mark, I'm ready to retire now. I'm ready to set some money aside or replace my income. How do I do that? How do I change my investment allocation to align with my goals now, right? Early on, maybe your goals are really to grow your money. And so you want to take more of an advanced approach. You want to be more aggressive in your investments. Well, as you get closer to retirement, maybe the goal should be to begin to protect what you've accumulated over that time frame. And so how do we begin to allocate and structure your retirement to do that? And so no matter what stage in life you're in, this is really, whether you're 35 or you're 65, this is really the financial plan that you want to set up. Once we have the foundational things set up, this is strategy number 2, is really diversifying your retirement income. And we look at retirement income in 3 different buckets. So the first bucket is your guaranteed source of income. Your guaranteed source of income are going to be things like your Social Security. And I'll have this conversation. I had it later on in the presentation, but I think it's worth bringing up now. Social Security, a lot of the pastors in general have the option to opt out of Social Security, right? They give you that choice to opt out of it. Well, when you opt out of paying into Social Security, the result of that is when it's time for you to collect Social Security, there's nothing there for you to collect. right? So we want to make sure, go ahead.
Yeah, I wanted to make one note though, in terms of clergy being able to opt out of retirement, there's only a certain window. So, and that window is from the time that you actually become ordained as an elder. So for most of the people now, that window is probably long gone. So that ability to opt out is really only going to be something that's available for new clergy, new elders. I think it's within a year or two, but it's a window.
Yep. So Social Security. So if you did not opt out and you do have it, that's going to be a guaranteed source of income. Your other guaranteed source of income, if your church provides it, if it's church sponsored, something called a pension. Not many churches offer it, but it's something that could be set up where the church is contributing to an account for you. And at some point in the future, that account becomes your monthly stream of income. Another one is something that you can set up yourself. It's something called an annuity. You have the ability to set up an account now, invest it in the market, grow it over time, and then at some point in the future, begin to draw a monthly amount. Now, the reason this guaranteed bucket is so critical is because we want to make sure that the needs that you have, the expenses that you have, are covered by guaranteed sources of income. We want to make sure that the monthly money amount that you need is covered by these guaranteed sources. And the reason that is because the guaranteed sources are not impacted by market fluctuations. We talked about investing. We talked about the market going up or down. Well, guaranteed sources are not impacted by that. Well, how do we still continue to grow the money over time, right? Because you start your income at one point, but your expenses increase over time, right? And that's where the growth bucket comes in, is that the growth is a hedge against inflation. So where you may need $3,000 a month now in retirement, in 20 years, that $3,000 may mean $4,000 a month, right? So how do we make sure that we're still keeping pace and you're still able to live the life that you want? That's the growth bucket. And that middle bucket is called the near-term bucket. This is a bucket that I think is really critical, and it kind of goes back to the emergency savings account, is that if the market is fluctuating, if the stock market is going up and down, what you don't want to do is tap into the growth bucket when the market is down. If you were watching the market back in 2020, when the pandemic hit, stock market went down about 30%, right? That's not a time that you want to pull out. That's actually a time that you want to invest more when the market is down. And so this near-term bucket solves for those volatility moments in the market so that you have access to some resources or to some reserves until the market begins to recover. So this is the strategy that we really want to set up. And really, this is a strategy as it relates to your compensation package that we want to make sure is established. We want to make sure that there is going to be some sort of guaranteed income as it relates to your role as a pastor. So whether it is a pension or whether it's an account that the church has contributed to, we want to make sure that there is a growth bucket via a 403B that you're contributing to on a monthly basis. And the 403B, all that is a tax code. So very similar to an IRS, to the 401k that you would have at a corporation. The 403B is designated for churches and nonprofit organizations. Now, for clergy and pastors, there's a special rule with the 403B. And that special rule is that when you do retire, when you do start taking distributions, you can start pulling out of money out of that 403B and use it towards your housing allowance. That means that's going to be tax-free, right? And we'll talk about taxes a little bit later. So there's really a double tax benefit if we can set a 403B up for you so that you have some tax-free money later into retirement, just like you have tax-free resources now. Good question, Bishop. Are you good there?
No, I'm good. The one thing, I guess, two things to note is, one is that if you do a 403B, which is equivalent to a 401k for major corporations, that's only talking about the tax code. But if you do a 403B, what happens is that money that you set aside into the 401(b), it actually reduces your taxable income from a tax perspective, right. Which is a benefit. And then you get the extra benefit of being able to use that money, which is very powerful, into your housing allowance and not be taxed by that. Right. The other thing, and I don't know to what extent you deal with this, but there's also something called the Rabbi Trust, yep, which is something that is specific for pastors where they can go ahead and set that money aside. But the interesting thing about the Rabbi Trust is, number one, there's no cap in terms of how much money you can pull over to the rabbi. Number two, you can actually put the rabbi in high stake investments. You can put it into stocks, you can put it into, and so you can get with a Rabbi Trust returns of maybe 15 to 20%. I've seen those. But it becomes a very, very substantial nest egg. The only downside to the Rabbi Trust is that until it vests into you, it's considered to be assets for the church. So that can be touched by creditors. So if for whatever reason the church goes into bankruptcy or gets into financial problems, then the creditors can tap the Rabbi Trust in order to satisfy the debts of the church, because the church would be the holder of the trust.
Yeah. I think the other thing for consideration with the Rabbi Trust is at some point, that account becomes taxable to you, right? The distributions become taxable to you. So as it relates to building these different retirement buckets, we want to make sure that not only are you diversified from your investment standpoint, but that you're diversified from a tax standpoint, and you know what your future tax bracket is going to be. So we talked about a few different buckets of creating income in retirement. And again, this is just a self-assessment that I just want you to ask yourself and identify where you are. So based off of the savings that you currently have, the investments that you currently have, do you have a diversified bucket of assets? Do you have the growth? Do you have the near term? Do you have the guaranteed bucket? Or do you have one of these or multiple of these? Where are you at today, and where do you want to be? That's just the purpose of that one. So I want to dig a little bit deeper into this conversation around taxes that you're talking about, Bishop, and really frame it from three different areas of this tax code, right? So there are accounts that you can set up where you pay taxes every year, right? So I want you to think about your savings account. If you put money in a CD, if you have a mutual fund account, or if you're getting dividends, these are accounts where you get what's called a 1099 statement at the end of the year. And you're paying taxes on these if it's in that structure. One of the accounts that Bishop is talking about here is the taxable later account, the Rabbi Trust, owned by the church until it vests. But the growth is tax deferred, so you don't pay taxes every year as that money is sitting in that trust. So that's a really great vehicle to get started in. But then the other taxable later accounts are going to be your 403b. Annuities, and even stocks. Most people don't realize that stocks is actually considered a tax later investment, right? The only time you pay taxes on your stock is when you sell it, when you have a capital gain. So to your point, Bishop, if you're holding McDonald's stock for 20 or 30 years, you're going to pay the taxes on any dividends that they pay, but you don't pay any taxes on the growth in that account, right? So if we structure it correctly in the right type of account, like a Roth IRA, right? And we put it McDonald's stock in a Roth IRA, and you're getting those returns. Well, you're not paying taxes on the growth, and then you're not paying taxes on that money as it comes out, right? Which is the third bucket, right? How can we control the narrative of taxes? How can we still invest, have a financial plan, but reduce the tax limit? And so the tax never is typically the bucket that I start with the pastors that I'm working with in creating a retirement plan. We want to control that as much as possible. And we start with the 403b. Let's max out the 403b. So 19,500 is that number. So if we can contribute 19,500 every year, and we can break it out on a monthly basis, we can max out the 403b. Now, once you get above age 50, you get an extra $7,000 that what's called a catch up. So we can actually contribute a little over $26,000 per year into the 403b. Now, if we're able to do that, to your point, Bishop, that reduces your income for the year, right? So it's a tax benefit now. And if we structure it correctly, when you do retire, you're able to take a housing stipend, and that's going to be tax-free later, right? So just think about, 19,500, and I didn't do the calculation here, but 19,500 or 26,000 invested over a 20-year period, right? Growing at 7, 10, 15% return will be a nice nest egg for you in retirement. Will give you the freedom to say, maybe I'm transitioning from the pulpit to being more of an advisor, to being more of a disciple or of other pastors, right? Allowing there to be this transition of responsibilities within the church. It just gives you more flexibility on that rather than depending on the monthly contributions of the church, right? So the 403B is a really great, powerful tool. And then once we max out the 403B, there are things like, and we've talked a little bit about this, but cash value life insurance, right? And that could be structured a few different ways. I truly believe that every church, every pastor should have what's called a key person policy. This is a policy where there is no max on the contributions, right? You can put as much money into this policy, and it has two different features. One feature is if something happens to you, there is a death benefit for your family and for the church. But it also builds a savings account, an investment account that you can leverage as part of your diversified income strategy in retirement. Looks like you have a question there, Bishop.
Yeah. So the one thing that you did talk about is in terms of the 403B, what may be helpful for people to understand is how easy is that to get set up, because you do have to have, a 401 or 403 does have to be a qualified plan. So maybe just give people just a high level, quick explanation as to what they need to do in order to get that set up.
Yeah. So any type of qualified plan that we're talking about, 403B or 401k, has to be sponsored by a company. And the company that it can be sponsored by is your local church. And so whatever your name of your church is, as long as you have a tax ID, we can set up a church-sponsored 403B. And now 403Bs you can set up with just putting in $50 a month. So there really, at this point, is no barrier to entry for setting up the account. Now, there are certain fees, what we call management fees, depending on how the investments are growing. You do pay management fees, but to really set up an account, all you need is a tax ID number sponsored by a church, and you can start getting that account set up. And that's something that either we can set up for you here at my firm, or we can refer you to someone that's local, close to you, to get you guys to have to set up. But yeah, the cash value life insurance is extremely critical. It can help to build, and again, it's really a nice feature to have as it relates to having a death benefit if something were to happen, but then also having this savings vehicle that you are able to borrow against or to use and to leverage, not only in retirement, but now I have clients that have used their savings account or their cash value life insurance to purchase a house, or to do ministry work, or to do different things. Some of the accounts that we've talked about, the 403B, there is a vesting period, right? There is a qualification period before you can start taking distributions. And that time frame is age 59 and a half. So if we're looking to set up, and this is really based off of what your financial goals are, if the goal is retirement, then the 403B by far is the best place to get started. But maybe there's some other financial goals where you want to expand the ministry and you want to do some other things for the church. Then we would not set up a 403B. We would set up a different type of an account for the church for maybe some of your shorter term goals. So this is really, really where it's important to identify where it's not just about saving money and investing money. It's really important to identify, what are my goals? What am I looking to accomplish? And what are the different buckets and vehicles that are going to help me to maximize what those goals are and the investments that are associated with it. And then one last one in this tax never that I think is highly missed often is the health savings account. This is one account that has kind of a triple tax benefit. So very similar to the 403B. As money goes into this account, you're able to take a deduction. So it reduces your income. As the money grows, you don't pay any taxes on that. And then third, if it's used for qualified health expenses, you're able to use it on a tax-free basis. Now, there are contribution limits to this account, but for all of us, as we age, the number one expense that we're going to have is housing. The number two expense we're going to have is our health, right? Medications, doctor visits, doctor facilities. And so if we're talking about building a financial plan that's going to cover all of these different areas, establishing a health savings plan. And this is something, again, if we're talking about establishing a compensation package, this is a conversation piece that we really need to establish within the church, because this is something that the church can possibly contribute on your behalf. Any other questions here, Bishop, before I get into the next one and kind of wrap?
Someone did put a thing in the chat, and I guess while we're kind of fielding some stuff, they did have a question. So one person had a question. They said, why a cash value insurance as they are very expensive? Do you think buying term and investing the difference would be a better alternative? In a cash value life insurance, you either get the cash or the insurance, not both.
Yeah, so it really depends on your financial situation. Term is a great vehicle because it allows you to have a max benefit. So you can have a lot of insurance based off of your need for very low premium. And so for if you have a high need, if you have debt that you're carrying that you want to make sure that is paid off, if you want to leave a inheritance that is pretty sizable, then term will give you the benefit. Now, the downside to term is that it's just pure insurance and it's only income replacement for a number of years. The longest term policy that I've seen out there is 30, maybe 35 years. And so at the end of that year period, then now the premiums, you can still renew it. It becomes annual renewable, but it goes up 12 times the amount that you were paying before. And there is no equity or cash value that was accumulated over time, which, compared to the cash value life insurance, yes, it is more expensive, but it's because there are more benefits. There's more flexibility. There's more control that you have. And if you pay the premiums for life, there is a benefit for life. And with the cash value for the death benefit, and I'll just give high level, quick example. Let's say you have a key person policy at $1 million and the cash value is at $500,000. And you use $500,000 of the cash value. Well, there's still a death benefit available to you of $1 million. The challenge becomes where if your cash value is the same amount as your death benefit, then there is no benefit when you pass away. So this is where annual reviews and just kind of checking the health of the insurance is important, so that we know how to maximize it and how to use it. But I believe in both term and permanent or cash value, but it's about finding the right one that aligns with what your goals are. And this kind of leads into kind of the last section of the day. We've already talked about Social Security, which is number 5, so I won't go into that. But strategy number 4 is protecting yourself against the unexpected. All right, we've talked about some of the expected events that are going to happen, retirement, but what about the unexpected? Premature death, serious illness, extended care. Where are the resources going to come from to provide the monthly income that's needed for that, right? So we've talked about life insurance. Term insurance, again, like I said, is a great tool for income replacement. So if you're looking to replace your income for your spouse, and I'll just use myself for an example, my wife, if something were to happen to me today, my goal would be to make sure that she has my income for at least until she retires, right? At least for the next 30 years, right? So in my scenario, having a very high term benefit or a term policy for 30 years makes the most sense for us. But we also have a cash value for later. But if you're under the age of 70 and you're watching this, you can still purchase a term policy. And if you want to replace income for your spouse or for your children's, a term policy is going to do that. The other thing that I don't think we talk often enough about is a serious illness, right? What if we have a disability which causes us not to preach in the pulpit anymore, or not to do what the work that we've been called to do? Where is the income going to come from? Where there's a policy called a disability policy, where it can replace your income for either a period of years, so 2, 3, 4, 5 years, or you can replace your income all the way up until age 65. And the reason that age 65 is there is because at that point, you have the ability to transition to Social Security disability as a benefit. But prior to that, what is the plan if you were to incur a serious illness and you need to pay for that each month? So this is all about building a financial planning package for a pastor. And the last one is the extended care, right? So we talked about early on the go-go years, kind of the Slogo years in retirement, and the no-go years. And so these are those years where you cannot, you need assistance to get around. You need assistance to use the restroom. You need assistance to feed yourself. Where does the money come from? Now, you do have healthcare, right? You do have Medicare that's available, or you can pay into healthcare. But the person that come into your home, there's a cost for that. Now, us in the Black community, and we've done it for years, where we just kind of rally around each other. And I remember my grandmother, before she passed away, I had Tuesdays and my aunt has Wednesdays, and we would go into her house and just provide the care for her, make sure she took her medications, cooked her breakfast, and do all that things. And yes, that is, I believe, a plan B, but I believe a plan A would be, let me set something up so that I'm not a burden on my family. Let me set something up so that there are resources, so that, me at 20 years old, didn't have to go to my grandmother's house. As much as I love her and I want to visit her, I still had a family on my own that I need to provide for. And so that reduced my income as a result. And I would do it all over again if I had the chance to. But what if you had an opportunity, to help to mitigate that cost? And so that's where the extended care comes in. We want to make sure we have established. Bishop, I know we're at 10:55 right now. I want to just kind of open the floor. I know I've talked about a lot. Where do you want to? Let's just open it. Are there any other questions that we want to open up the floor to?
There was a question that actually Administrative Assistant Michael Henderson he raised. His question was, what's the difference between a SEP IRA and a 403B?
Yeah. So a SEP IRA, if I go back to that chart, let me see if I can find it here. So this chart here, right? So SEP IRA is going to fall within that taxable later bucket. This is for an account. This is for business owners. So if you own a business outside of the church and you have income in, you're able to contribute up to 25% of your revenue. SEP is just SEP IRA is a tax code, allows you to make contributions for retirement, right? So it's another way to put money away. The downside, if you're clergy, if you're a pastor, the downside to the SEP IRA is, as this money is growing, when you start taking distributions from this money, you're going to have to pay taxes on that money, right? So if you have the ability to set up a 403B, I believe the 403B is a better vehicle for pastors because there's more flexibility. But a SEP IRA is a vehicle that a lot of my business owners do set up. And it's much cheaper. And the reason they do it, because it's much cheaper than setting up a 401k if it's just, one or two employees within the company.
So the thing is that, so here's, let me kind of muddy the waters a little bit. Say if you're we have a lot, say, and including myself, say if you are a bivocational pastor, how can you use these, and where would that bucket of money go? Because if I set up a 401(b), I'm assuming that can only be set up in terms of being able to be deferred compensation based upon the income I'm receiving from the church, but not from my secular.
Yep, that's correct. So that's kind of where the financial plan comes in, right? Really organizing your life and what are your income sources. The 403B, just like you said, is specific to church-related income. It can only be used nonprofit income, right? The SEP IRA, if you do have a business that's separate from the church, then the SEP IRA can be set up. So you can have multiple retirement accounts based off of how you're structured as an entity, whether you're a pastor, you have a business, and if you're working bivocationally for an employee, for an employer, you can also have a 401k. It's all about how your income is earned. Now, there are going to be limits eventually on how much you can contribute to all of these different vehicles. And so that's where, maybe your business shouldn't be in your personal name and you should set it up in an LLC, right? Or in a corporate S corp, so that you're able to leverage some of these tools. But again, this is where kind of we started the conversation of understanding and organizing. The first step is really identifying what's the cash flow, what money is coming in, where is it coming from, and how do we set up different accounts to maximize what our future retirement accounts are going to look like.
And the one thing that I will say in terms of planning and retirement and financial planning, especially for pastors, is given the fact that you've given this tax benefit of a housing allowance, and I trust that everyone's taking advantage of that, there should be no excuse for you not to use that benefit of the money that you're saving from taxes
Right.
to put that into some form of a long-term investment, because you'd have to pay it anyway. So why not set aside that money and put that into some sort of long-term investment that will help to sustain you during retirement, or that you will have something in terms of for estate planning in the unfortunate event of your demise. So you have those things available to you. And I know a lot of times people are saying, well, where do I start? Where's my entry point? You can start with that, with those resources that you're getting. If you are benefiting from a housing allowance, take that money that you get that benefit and move that into some sort of investment plan.
Yep, for sure. So a few different resources I do want to share for the sake of time. So anyone on this call or watching, if you want to sit down with myself or someone from our team, we're going to offer just a no fee customized strategy to help you to organize. Where are you at today? Where do you want to go? And how do we set up these different accounts to get you there? So whether it be with you personally or your church board or a certain committee, we can help to establish that. The second resource that I want to give you is a workshop that we are doing for some of our internal clients, open it up to you guys here on the call. And so the first one, because of Black History Month, we're talking about this idea of the wealth gap, right? How do we reduce the wealth gap? And a lot of the topics we talked about today will be included, but it's going to be open to anyone. So not just clergy, but anyone from your church, anyone in your family can attend. And then the other seminar that's coming later next month, March 10th, is it's going to be done by Rob Folk, who's a CPA, certified public accountant, and he's going to be talking about church and minister taxation. So if what I did was an appetizer, he's going to provide the full meal on the tax conversation as it relates to that. So if you're interested in the details and you want to attend, all of these are going to be virtual. Just text the word COGIC to that number there on the screen, 323-612-1250. You'll get an automated response from me, and then I'll make sure to get that information to you. So just text the word COGIC to 323-612-1250. That's all I got for you, Bishop. Hopefully this was helpful. Hopefully this was inspiring. Hopefully this was empowering, so that you have maybe some tools to get started. Again, I think the first step is to begin to organize. Where are you at today, right? Starting to write that cash flow plan, and then sitting with a professional, whether it's myself or someone else, identifying what do I need to do to get to where I want to be, and we can help you along the way.
Awesome. Thank you. Thank you for that amazing information. Extremely, extremely helpful. And I trust that people were able to be able to let this sink in and get some real valuable information. And of course, the benefit is that this is on YouTube, so you can go back, listen to it again, and not feel like, hey, if I didn't get all the notes, you can go back and replay it to get this information. It's very, very critical. Like I said before, really the financial planning and planning for the future is so critical, and it's so important for your individual lives, but it's also too something that oftentimes people don't really consider when they're putting together their compensation packages with their church. You want to make sure that you have something available for the future, and that you also too have something that's available in terms of legacy. Again, when you talk about legacy, legacy is not legacy if it dies when you die. Legacy is something that extends beyond your life. And so when you're talking about building wealth, building legacy, that is things that are generational. And I think it's very, very important for us to have a legacy mindset in terms of what we're doing here is something that will extend far beyond our lifetime. I did see another question that came up in the chat and someone asks about housing allowance, and they may not be so familiar with what a housing allowance is, and maybe you can give them sort of a high level of what housing allowance is to give them information on that.
Yeah. So part of your compensation package as a clergy, you're able to, and I don't even know when the year was, but prior to, I don't know, maybe 50, 60 years ago, churches also had a parsonage. They had a house that was on site, and they would allow pastors to live in that house. They didn't have to pay anything because it was owned by the church. You can live in that house and you would, pastor the congregation. Well, things have evolved and things have changed. And so the IRS says you can still have that benefit. But a lot of churches may not have a house on site. So what we can do is pay you in compensation and direct it towards a housing stipend. So an amount, and that amount of money becomes tax-free to you, because it would have been tax-free to you if you would have been living on site, right? So housing stipend is strictly a way to receive money, and you don't have to pay taxes on it. Now there's a few rules in there. You want to make sure that your actual housing costs, so your rent, your mortgage, your utilities that are included in that amount, it does not exceed what the housing stipend is. So you want to keep track of that. But yeah, you're able to leverage and have, a large portion of your compensation be tax-free as long as it's directly correlated and related to the cost of maintaining your household.
And actually, the thing is that it can actually be your entire compensation. So, for many small churches, you may be receiving sort of a fairly modest salary. It can be the entire salary. A couple of things to the housing allowance that's important, though, is that the housing allowance has to be set in the year prior to the taxable year. So, for instance, and it has to be something that's approved by the board, and it has to be in the minutes of the board meeting. So the thing is that, so say for instance, for myself, I have a housing allowance, right? So what I did is during the board meeting during December, and every December I come to the board and I ask the board to approve my housing allowance. Once they approve it, then it's approved for the entire taxable year of 2022. I did that at the end of 2021. Now, if you don't have that set up now, what you can do now is you can go to your board and ask your board approve a housing allowance. And if the board approves it tomorrow, then from this day forward, you can now seek to get it's actually a deduction from your, you don't have to pay federal tax upon the federal tax portion on your salary from this day prospectively forward from the day it's approved. For the whole fiscal year, you have to have it approved prior to the year. Now, the one thing, the nuance to the housing allowance is that, number one, it's not additional revenue. So say, for instance, if I get $20,000 a year and my housing cost, it can go for rent, it can go for paying cable, it can go for cleaning, anything that has to do with your home. Excuse me. Say if I only have $10,000 a year of expenses towards my home and I receive $20,000 a year, then I can get a $10,000 housing allowance. And what will happen is that $10,000 is not taxable from the federal from federal taxes. Now, just because it's not taxable from the federal income tax portion, you still have to pay Social Security tax. Okay, so it's not, and I think that's some of the nuance. It's not the absence of not paying any tax. It's just you don't have to pay the federal income tax portion, right? But you do have to still pay the Social Security tax portion of that income that you received. But if you receive $20,000 and all of your costs in terms of mortgage, or if you are renting or other costs, if it exceeds that, then you can actually ask for a housing allowance of $20,000. And what happens is with your housing allowance, it is the lesser of the amount that you have designated or the amount that you spent. So what I say that, for instance, I asked the board for $30,000 of housing allowance, they approved that. If I only spend $25,000 in housing cost, I'm only going to get $25,000 of housing allowance. But if I did not plan and I asked for $30,000 in housing allowance and the board approved $30,000, but I ended up spending $35,000, I'm only going to be able to claim $30,000. Okay. So that's why it's important to really understand how much you're actually spending. The amount of that's designated is very, very important. It's not open-ended. So you can't just say, oh, I'll wait till the end of the year and then take a housing allowance on that. No, it has to be set prior to the taxable year. So those are some of the nuances that you have to follow in order to do that. So once you do have that approval in hand from your board, then you can go to your tax professional and they will know how to address it from a tax perspective in terms of that. And the other benefit too is that the housing allowance is a double deduction. Yep. What I say double deduction is not only do you not have to pay federal income tax on the housing allowance portion, but you can also deduct your housing cost from your personal income tax, right? So it's a double deduction. It's a double benefit of that housing portion that works towards you. So it's something that if you are a clergy member, you definitely should take advantage of a housing allowance if possible.
That's good.
So that's speaking on that. Hopefully that was helpful for the person who had the question on housing allowance. I don't see any other questions with regards to the investment planning portion or any of that. This is some great, useful information. And I trust that people will go back again, listen to this, but understand how critical and important it is to really plan out and set forth and have a solid financial plan in terms of things that in the present and also towards the future to ensuring your wealth. There's a lot of things at your fingertips. We've got great resources in terms of people like yourself, Mark, that we can always call and ask to get financial advice. And I know that you really have a heart to being able to tap in and to be a resource for clergy and people within the coaching community. I think it's very extremely important that we tap into those resources so that we can plan to have a stronger and a brighter financial future for not just ourselves, but also again for our children and again for our children's children. So I want to again thank you for making yourself available to provide this excellent and amazing information. Again, if you're looking on the screen, Mark's information is there. Please write it down. Text Kojic. I'm going to text because I want to go to a couple of those seminars myself. And you can email Mark for more information and follow up and get more information and resources on some of those financial planning strategies that he discussed on today. So again, I want to thank him. And before we close out, let me see. There's one, I think someone put a question. Actually, we have a question and answer tab. And there was a question that says, can you go back over the double deduction? Okay. So maybe that's the thing for me. So, okay. So double deduction is, we said for the housing allowance, if you get a housing allowance set up and it's established, then what you can do is for your income. So say for instance, I make $20,000 a year from my church, but I'm actually, just to make it simple, my mortgage is $20,000 a year and all my costs. What I can actually do is I can ask the church to approve a housing allowance of $20,000. Now what's happening is the church isn't not giving me more money. And I think that's one of the things that people kind of get confused about in terms of a housing allowance. They think that that's additional money. No, that's whatever portion of the income that you're receiving from your church that is designated as a housing allowance for a tax purpose. Okay. So if I say, and I get a $20,000 housing allowance, which is my entire portion, then what happens is from the federal income tax portion that I would normally have to pay the IRS, I don't have to pay that. But when you're paying money to the IRS, there is a Social Security portion, and there is also a federal taxation portion. Now, what Mark referred to earlier is that for clergy, you can choose to waive and not pay Social Security tax. There's two stipulations. One is there's a window of time in which you can claim to the exemption. But number two, the other thing, and it's not really major, is that there has to be a religious purpose or reason why you're claiming the exception. If that's not a huge hurdle, you can just say, look, we just choose. You can make up anything and it'll pass over the hurdle. But those are really the two stipulations as to do that. Now, if I claim to be exempt from Social Security, then what would happen is I wouldn't pay any tax at all. But for the average person, you're only going to be relieved from the federal income tax portion. And your tax advisor, whoever prepares it, would know how to handle that. So that's not something that you yourself have to stress out over. The only thing you know is you'd be getting the benefit of not having to pay the federal income tax portion on that revenue. Now, the double benefit or the double deduction is that for your Schedule A in your IRS, you're going to be claiming your mortgage and all your other housing taxes in your Schedule A. So I'm saying the double deduction is you both will get the benefit of not having to pay the income, the federal income tax portion of your revenue for the housing allowance portion. But at the same time, too, I can also, in my Schedule A, claim as a deduction all of my housing costs. So that's where it becomes a double deduction. So hopefully that's clear. It's not an either or. You can use those in both sides of the tax designation. So hopefully that's kind of a little bit clear. But at the end of the day, your tax professional should know how to handle a housing allowance and how that would align with your IRS taxation. So again, the key thing though is that you need to make sure that you go to your board. It has to be, for lack of a better word, sponsored by the church, in that the board has to sign on and has to agree. You cannot just designate it yourself. There has to be records saying that your employer approved the housing allowance. Okay, so I think that was clarified, and so yeah. So the person said that. I think that hopefully that addressed that. Any other questions? We do have a question and answer box as well within the webinar session.
One thing, Bishop, that I was thinking about, we were having a conversation about the 403B and kind of the benefit there. One area of caution that I've seen a handful of times, so I think it's worth mentioning, the 403B is church sponsored, right? There has to be a church associated with it, right? What I've seen happen is when pastors retire, maybe they leave and they go to a different church or they no longer pastor, they roll over the 403B to an IRA, right? When you do that and you move it out of that church sponsored plan, now you lose that benefit of the housing stipend that we've been talking about. So you want to make sure if you're at that critical age of now I'm ready to start taking a distribution from the 403B, in order to get that benefit, it still has to remain church sponsored. You move it to the IRA, you no longer have that benefit.
Right. That's a great nuance to that. And that's why it's important to really be able to walk through some of those stipulations with a good, sound financial advisor. And the other thing too is that when you talk about deferred benefit, no taxation typically happens until money is what's called vested, which means you actually receive the money. So it's good because you've received that benefit, but you kick the taxation down the road. And for some of these, you can roll them in. And if you keep them and you don't touch them for long enough, you actually don't have to pay any once you reach a certain age. So just really being able to advise and know when things vest or when you can actually tap in to not have any type of financial consequence or taxation on it is very, very vital, very, very important. but these are a lot of different avenues that are helpful in ways, again, for us to be able to build wealth. And the IRS created a lot of these opportunities to encourage people to save money long term, because ultimately what happens is that ultimately that helps inflation. It helps the overall financial growth of really the country. When people invest, put money away, and put them in, it helps to grow the resources for the entire nation. So, and the method and thought for providing a lot of these avenues for clergy was that they used to think that clergy didn't make money, right? But now a lot of these things have come under attack because they see pastors, with airplanes and Maybachs and Bugattis, living in $1 million houses. It kind of flips all this stuff upside down. And so now you have many of the corporate folks saying, look, these guys are making the same amount of money as we are, but we're being taxed and they're not. It's really kind of shifting the pendulum. So you should take advantage of it while you can, because there's sometimes a downside to being from mega ministries. They kind of upset the apple cart in terms of some of the methodologies and some of the tax breaks that the government has given clergy in this area. So again, I want to thank you for this great, awesome information. And before we close, I want to encourage all of you. Listen, if you were to go anywhere else, you'd have to pay, a couple $100 to get this level of sound financial advice. And I'm just so thankful to our jurisdictional bishop, Bishop Ely, for allowing us to have this opportunity to provide these resources to you at no cost. And so as we always do, we ask if you will just support our jurisdiction. This gives us the ability to provide these types of empowerment sessions to help to give you useful information. And what I will say is that we endeavor to provide you strong, practical information that you can be able to use for your ministry. We don't want to waste an hour and a half of your time with stuff that you cannot use, that will not help to build your ministries, and to not help you to be able to grow. We plan these sessions specifically to help you to be able to have useful information where you can grow. And so we're asking all who can and will to provide just a seed. If you can do it, we're asking you to give $25 seed to help us just to be able to sow into our jurisdiction for these day sessions. You can give by Givelify. We also have PayPal. There's also Cash App, or you can do by text to give. And of course, even though it's snail mail, it still works. Those who you want just to drop a check to jurisdiction number 1 to our jurisdictional office, you can definitely do that. The address there is 1480 Atlantic Avenue, Long Beach, California. And so we just want to ask you to provide in any method you possibly can. Please go ahead and sow into our jurisdiction so that we can continue to have these great and awesome sessions. Again, I just want to thank you, Mark, for taking this time to give us this great information. I trust and pray that as many of our clergy as can will reach out to you and you take advantage of your great resources. I want to encourage all of you. We start tonight our evening sessions, and I'm asking as many as you can come out tonight to our evening sessions at Gospel Memorial. We are planning to have a great time in store. Tonight, I believe it is Administrative Assistant Kevin Moorland is the speaker tonight. You don't want to miss it. He's an awesome and amazing speaker. And of course, we are anticipating hearing from the voice of our jurisdiction on Friday night. And we will be hearing from our Saint and Mother on Thursday night. So again, I want to encourage all of you to participate, those who can and will, on the evening services. If you cannot be at Gospel Memorial, you can watch, of course, online through our social media platforms, through YouTube. You can watch through our Facebook channel. But we ask that you play a part in your jurisdiction. Now that we have this virtual reach, there is absolutely no excuse for you not to play some part in our workers meeting on this week. Again, I want to thank you. I love you with the love of the Lord. I'm asking you to come back tomorrow. Tomorrow, we're going to have a wonderful and amazing speaker in Princeton Parker. He's going to talk. Our master class is going to be on how to build a young adult ministry. People really have been asking that question for so long, trying to figure out different strategies. You're going to hear from one of the absolute best who is going to share with us and impart with us some great sound wisdom and gives us some tools on how we can build a strong and effective young adult ministry. Listen, I love you with the love of the Lord, and I look forward to seeing you on tomorrow. God bless.